Hello everyone, welcome to an online session of Class 12 Accountancy, Chapter Goodwill. Now we are going to solve a numerical question to calculate goodwill. Here you can see the question. A purchased B's business with effect from 1st January 2015. The profits disclosed by B's business for the last 3 years are: year 2012, 80,000 rupees. It includes an abnormal gain of rupees 10,000. Year 2013, amount rupees 1 lakh. It is the amount after charging an abnormal loss of rupees 20,000. And the year 2014, the amount given is 90,000 rupees. It's excluded rupees 10,000 as insurance premium on firm's property, now to be insured. From this question, first of all, you will have to calculate average maintainable profits. To calculate average maintainable profits, we have to subtract abnormal gain and add abnormal loss. Then, is there any amount of expense excluded in the year? Subtract it. And any income excluded, you will have to add it along with the given profits. In this question, abnormal gain of rupees 10,000 is given there in the year 2012. So subtract this amount from the given profit, 80,000 minus 10,000. Now you are getting 70,000 as the average maintainable profits for the year 2012. The next year, an abnormal loss of rupees 20,000 is there. What you have to do? You will have to add back the amount of rupees 20,000 along with the given profit of rupees 1 lakh. Now the year's profit is 1,20,000. Next year 2014, here you can see an amount of insurance premium not yet accounted. So this is an expense. Normally all the expenses are reducing the amount of profits. So 90,000 minus 10,000 is equal to 80,000. Now the profit for the year 2012, 70,000. Profit for year 2013, 1,20,000. And profit for the year 2014, 80,000. Now total profit for these 3 years, 70,000 plus 1,20,000 plus 80,000 is equal to 2,70,000. We are finding out the average. How can we calculate the average? Total amount of profit divided by number of years. Here 3 years are there. So 2,70,000 divided by 3 is equal to 90,000. In the question, it is asked to calculate the value of firm's goodwill on the basis of 2 years purchase of the average profit. Now average profit is 90,000. Goodwill is equal to average profit multiplied by number of years purchase. That is 90,000 multiplied by 2 is equal to 1,80,000. So here the amount of goodwill is equal to 1,80,000. Now we can move to the next question. A, B and C are partners sharing profits and losses equally. They agreed to admit D for equal share. For this purpose, the value of goodwill is to be calculated on the basis of 4 years purchase of average profit of last 5 years. So 5 years profit is given. Year 2009, 30,000. 2010 profit 70,000. 2011 profit 1 lakh. 2012 profit 1,40,000, and 2013 there's a loss of rupees 1,20,000. Next part of the question. On 1st January 2013, a moped costing rupees 20,000 was purchased and debited to traveling expense account, on which depreciation is to be charged at the rates 25%. Calculate the value of goodwill after adjusting the above. So moped, it is a vehicle, so it is coming under the head fixed assets. Revenue means day-to-day expenses. So by mistake, an item of capitalized value is treated as a revenue expenses. So this expense must have to exclude from profit. So the amount of rupees 20,000 should be added back along with the profit of the year 2013, and we have to take 25% of rupees 20,000 as depreciation. That amount must be added back to the loss. Is it clear? It is loss. That is the reason, first of all, you will have to subtract. It is loss. That is the only reason we are subtracting the amount of expenses wrongly treated. Actually, it is a profit. In the case of profit, we will add back the amount. In the year 2013, there's a loss. That is the only reason we are subtracting 20,000 from 1,20,000 and adding back the normal loss of rupees 5,000. 5,000 means 20,000 multiplied by 25 divided by 100. That is 25% of 20,000 is equal to 5,000. So now you can see the loss for the year 2013. It is 1,20,000. We are subtracting 20,000. Now the amount is 1 lakh. Then adding back 25% of 20,000, that is 5,000. Now 1,20,000 minus 20,000 plus 5,000 is equal to 2013's profit. That is amount 1,05,000. Again, you have to understand that it is the case of loss. That is the reason we have done this. Okay, now we can see the amount of profit for the year 2009. It is 30,000, 2010 70,000, 2011 1 lakh, 2012 1,40,000, and 2013 1,05,000. Whenever we are adding this amount, first 4 amounts we are adding. From that total, we are subtracting the loss. Then the total profit will be 2,35,000. That is the total profit. Now you have to find out the average profit. 5 years are there. So total profit divided by 5. 2,35,000 divided by 5 is equal to rupees 47,000. Goodwill is equal to average profit multiplied by number of years purchase. Here in the question, number of years purchase is given as 4. So 47,000 multiplied by 4 is equal to amount rupees 1,88,000. That is the amount of goodwill. Thank you.